No.
Just listen. We are live.
We are live. This will be fun, Stu. I'm looking forward to this.
All right, let's get ready to rumble.
Well, welcome in everybody. We're going to be covering our Q2 2025 state of the market for energy and oil and gas. You can think of this as the State of the Union, but for energy and oil and gas. And hopefully it's got a little bit better flavor to it. So really excited to get this to you guys. And Stu, I think we're starting with energy, so I'm gonna kick it to you.
All right, let's get rolling here. We've got a lot to cover here. Is peak oil, let's go through the agenda here. Is peak oil actually here? Tariffs, rig count versus frac count spread. Oil and gas goes international. That was a great interview and a couple of talking points there. My market bifurcation and net zero rebrand. Politics, the green news scam. Nuclear poised for a comeback. Boy, it is all over the news. The EU is scratching their head. Wind and solar, a tough road ahead. Michael, it is going to be crazy.
No, it's going to be crazy, and I think we'll start with your energy stuff, and this is going to be great.
All right, let's get ready to rumble. And as just doing a little bit of housekeeping here, make sure you ask your questions. We are live on LinkedIn, X, and YouTube. So ask any questions, and we're off and running. So let's have some.
Oh, in your X account, here. We're going to get some crazy stuff.
Yeah. Oops. Okay, market bifurcation, and I went to Oklahoma State, so I can't say that very well. But here's the key thing on market bifurcation: we're going to see two sets of markets open up here very quickly, Michael, and we're going to see them follow the Green New Deal or the Green New Holy Cow Batman on the pathway to prosperity. And why I came up with that is a couple different ways. The new report from Watt Logic was very critical in saying that Green New Deal policies are not cost effective and they're driving the prices up. So you have Germany, you have the UK, you have New York, New Jersey, Delaware, Hawaii, Colorado, and California, all following down this path of going, holy smokes, Batman, this could be really bad.
Yeah, well, and what they're doing is they're doing that sleight of hand again that they did when it was global warming, and now it became climate change because they had to cover themselves in case it got cooler. Because that's still climate. They're doing this. It used to be net zero. Everything's net zero. Well, now they realize, we just need it to be eco-friendly now. We need it to be renewable. It's, again, the sleight of hand that they're doing, and they've done it really over the past couple months is crazy. And I think that report that you ran on, that Watt Logic report is fascinating.
And we are visiting as the Energy Realities on the 2nd, June 2nd, live on the Energy Realities podcast with Catherine. And she is the author of the Watt Logic report. It is phenomenal. Yep. So we will have her live Monday morning at 8 a.m. on that live podcast. So let's go to the next one here.
Yeah, let's talk about the other topic we saw, Green New Scam.
The Green New Scam. This one was how Republicans got roped into a deal that keeps the IRA and why there's still time to fix it. They just passed the big new beautiful bill, as President Trump has said, but there's still some things in there that delay it out. And Michael, you covered this yesterday as we were talking about this on the podcast. I did not have on my we got another couple great questions in here. The New York getting their Equinor offshore wind farm for a new pipeline. So I got to hand it to President Trump to go, you want your wind farm? You must give me pipeline. I'm like, holy smokes. He must have been talking to Putin or something. I'm not sure.
Well, and
And
I think, as we've talked about, and what I think you're seeing over the last couple months, specifically in Q2, is that Congress has really boxed themselves into a corner here. They got to do something about this IRA bill. They've got to do something. They've got to cut spending somehow, because that's the whole Doge thing is exactly what people wanted to do. Well, now all of a sudden we learned today that their spending bill is actually going to raise the debt. So they're really in a pickle. They gotta do something. And I think, like you said, Speaker Johnson, he's really in this rock and a hard place of what's he going to do? You got to get rid of these subsidies somehow, but
right.
in doing so, are you propping other things up?
And I really think that we've got to get rid of subsidies. And I saw Elon being interviewed, and they were saying, well, what about this subsidy for all of the chargers? He says, kill it. We want to kill any subsidies. I think that that's absolutely phenomenal.
Here we go. We got a question, Stu. How is the new hydrogen/ammonium economy, not the Green New Deal, just rebranded?
I love this question. This is a phenomenal question. When you sit back and take a look at that as a question, hydrogen is not only a scam. Most hydrogen is made from natural gas. You take a look at hydrogen. There's only one form of hydrogen that's out there, and it is white hydrogen. There are 40 countries in the world that are going after the white hydrogen right now. And of that, that's the only one that can be burned, but it can be transported economically, because the molecules, when you separate out natural gas into hydrogen, you can't use a natural gas pipeline because the molecules are smaller. Oops.
Yeah.
So
oops.
It's just a rebranding. So that's an outstanding question, Mr. LinkedIn.
Yeah.
So let's go to the next one here.
Yeah, we got to talk about nuclear.
A nuclear comeback. This one, there's all these stories that are out there, and Robert Bryce is just a cool cat. We had an excellent podcast with he and David Blackman this past week. But China, Michael, this story has approved 10 new nuclear reactors, bringing their grid up to 68 upon completion. The United States has 95, France has 54. And Brussels is just now saying that they're going to do it. Germany is now saying, oopsies, we don't have enough power to run our businesses, so we're going to go ahead and look at reopening again. Europe and the European Union is going, we're seeing.
Yeah, I mean, it's what's happening right now in Germany, Stu, is unbelievable, from the fact that, they're attempting to, everyone's attempting to go green without realizing the fact that nuclear either needs to be a big part of the conversation, or else you're just substituting things in and out. I mean, it's pretty crazy.
It is. And I see that we've got to get the nuclear. Here's another great question. How does going nuclear get us off foreign dependencies? Uranium supply chain isn't U.S. That is an outstanding question. And when you sit back and take a look, it also brings up a even bigger question, and that is 90% of the critical mineral mining is done, the ore processing is done in China. Yep. 50% of the uranium that the United States needs for its military and other things can be done now in the United States, thanks to a new uranium processing mine. However, cobalt and copper and zinc and all these others, this is a gigantic problem. Secretary Burgum just announced that he's going to be opening up the seafloor for mining. Mining is not the issue. We got minerals everywhere. We got minerals everywhere. It's the processing.
Yeah, it really. I mean, this we're gonna now mining the sea floor. Oh, sweet. Yeah, I'm sure that'll turn out great.
I'm not a fan. Not a fan. I am a fan of Robert Bryce, though. He is absolutely a cool cat, and that was a great
But to
podcast.
get back to that question, how are we gonna go forward? I mean, it's a great comment, and the answer is it, you're not really. I mean, at some point you are. We talked actually about this in our show yesterday, the daily show yesterday. Of at some point you have to deal with supply constraints from the standpoint of it's just it's a naturally occurring mineral that we just don't have. And if all of a sudden you're going to start waging war on China, which okay, maybe we need to do that, but understand if we're going to then go nuclear and China has all the uranium, well, what happens next? Or if Russia has all the uranium, what happens?
Yeah,
So,
I was going to say that now Russia is going to be more open to doing business here pretty soon, and it's going to be a tough pill to take for a lot of folks to think about doing business with Russia. But the way the world trade map is mapping out is India, Russia, the Asia markets are going
yeah.
to be one trading block. You're going to have China working with the EU, and China and poor old Canada is going to be part of that new trading block.
Yeah, absolutely. All right, let's move to the next one here. What's going on with wind and solar?
Well, I'll tell you what, the new the House bill that just passed, I was fairly surprised to see that the House bill passed the reconciliation bill, and I was trying to figure out what was in there. It does look to be that the spending and budgetary is 350 new, but it just kicks the can down the road is all it does. It increases the spending limit, but it does take away taxes for no tax on
Yep.
tips, and then tax on Social Security. And so it does do some good things, but it staggered out the wind and solar subsidies for 4 years, which is kicking it down the road.
Well, here's what I'm Stu. You're going to start paying me $0. I'm going to take a job down at the local diner, and I just need you to come in once a month and tip me my salary so that I don't have to pay taxes anymore.
I'm all in, because any dime that I've ever paid to the government has been squandered to non NGOs and then back to politicians. So, am I wrong in not wanting to give a dime to my government? No.
But when we look at kind of what we've seen over the last quarter with wind and solar, it definitely it's very interesting to see how, especially with Trump bringing back wind. Now he's also bringing in pipelines with it. ERCOT's come out and said, hey, guess what? We're going to have an energy shortage this summer. And it's not because there's no natural gas. It's
Right.
because of the way the grid is designed. It has a lot to do with retiring natural gas plants being somewhat replaced with wind farms. And so, I then obviously we can get into the Spain blackouts, whether or not it was a cyber attack, whether it was just old infrastructure, whether, I'd highly recommend checking out Stu's Twitter feed, because I'm sure there's some conspiracy theories on the Spain blackout that would be interesting to dive into. But I think a lot of what we're seeing in terms of renewables, wind and solar is just it's coming to a head at this point, where either companies are going to have to continue and push these projects and understand that the subsidies won't be there. And I think that's a very interesting scenario these companies have. I mean, like Equinor has dumped billions and billions of dollars into these wind projects now, that all of a sudden when they lose subsidies, part of me, the economist, would say, well, it's just a sunk cost. Forget about it. Move on. You can't worry about the dollar you spent yesterday. All you can worry about is the dollar you spend in the future. But at some point, you have to look at it as if I've sunk so much into this project. Can I go ahead and just put a little bit more in and finally get this thing online? I mean, I'm not the biggest offshore wind guy, but you'll make a couple bucks off of it. It's not like there's no revenue associated with it. There's a difference between revenue and profit, but there is at least some revenue.
Well, it's more, the grid management systems are more about frequencies and having dispatchable power.
Yep.
Spain failed, Michael, after 3 seconds. 3 seconds of not having a group of a power that was on the grid, and it caused that to trip. Texas, ERCOT, and I did an analysis, and it's on energynewsbeat.co and the energynewsbeat.substack.com. You can go there, and those articles that I've written about, we will have some serious problems when we take a look at more wind and solar on ERCOT. There are enough proposed natural gas power plants in Texas to make sure that we can get by for the next 3 to 4 years. I calculated out that they've got a good plan between approved and in construction. They are good to go. But if you're a data center and you're wanting natural gas dedicated like Stargate in Abilene, Texas, all of the power plants, all of the turbines are sold out for the next 4 years. This is a gigantic problem. You're going to see coal plants needing to be extended that were destined to be shut down. And I did an analyzation of all of the different states. Michael, it ain't good. I would not want to live in California, New York, New Jersey.
You wouldn't want to live with Gavin Newsom and potentially Governor Harris?
Oh, absolutely not. In fact, I swear that joke that gets funnier every time you and I say it, is if he goes swimming in the ocean, we're going to have to call him the Exxon Valdez. He's going to be worse than the Exxon Valdez oil slick. I love this one from this LinkedIn user. Will we ever shake the carbon control industrial complex if we embrace carbon trading and sequestration like Burgum? I'll tell you, I've got mixed emotions about this because carbon capture, there was 1,000 years ago, there was more carbon and CO2 in the atmosphere before humans. Before humans, there was more CO2. So if we're the problem, the CO2, there's less CO2 now. So we're not the problem. There's a lot of events that go on around the world that create CO2. CO2 is plant food. And so when you sit back and take a look at the carbon control industrial complex, that's a wealth transfer program. And the EU is going down that road. The UK is going down that road. And Canada is going down that road. India, not so much. China, they don't even know how to spell carbon. Wobbin, I don't know. They can't spell it. So they're not going to go down that road. So you see where I'm going with that conversation?
Yeah. I mean, I think carbon trading is an interesting market. I've gone down the carbon credits rabbit hole myself. I think there are some interesting things about it. Do I think ultimately carbon trading is going to help, quote unquote, lower carbon in the atmosphere? No.
Nope.
No.
Will it change behavior? Nope.
It's going to be a little bit of shifting behavior from places that don't want carbon to places that don't mind producing carbon so that they can sell the credits back to the places. And to think a carbon molecule doesn't just float across the Pacific and end up in California is dumb. So I think people will make money on carbon credits. I'm interested in making money on carbon credits.
I think it'd be great, Michael, but the Great Wall of China is not going to hold the carbon in. The Great Wall of China just lets that carbon go by and go, oh, look, carbon. Yeah. And so it's not going to do that. You're ready to go to the next one here.
Let's just jump over to oil. So, I mean, there's been really the conversation over the last, I would say this quarter, when it comes to oil, I think breaks down into three interesting topics. And the first one obviously is peak oil. Is it really here? We saw Travis Stice, the outgoing CEO of Diamondback. He came out and basically said peak shale may be here. Now there's a difference. He used a very specific term, peak shale, not peak oil. And so I think the answer is peak oil really here? No. Is peak shale here? It could be. It very well could be. The Permian, specifically at these prices, we're in that range right now, that $60 range of where break evens are close, and there you could argue that companies that are continuing to drill at these prices are drilling through inventory that may or may not be better spent and better drilled under different price decks. Now, the other steelman argument on the other side is, well, I got to drill my lowest cost assets now versus in the future. I can drill my $80, $90 break even ones in the future if we're like Stu and think oil's going to 100. So I understand a little bit of that standpoint, but I mean, people, I get this question often about peak shale. Is it here? And I think there's the distinction needs to be made between peak oil and peak shale. I would say peak shale could be here. I mean, shale is also a specific term, there are other oil basins that are continuing to rise. Is that the case? I don't know. Peak oil, I doubt we're at peak oil. So from that standpoint, but I mean, that's been a lot of the conversation. We got another question here, Stu. Are we ready for peak minerals, peak metals, and peak money? Man, well, I hope for me it's not peak money. I'm hoping for me I'm at the trough and sandstone and we're at the trough of money. I think from a monetary standpoint, I mean, no, Trump wants the economy to boom. Trump wants the stock market to go up. If you follow his True Social account, he's bragging on, and rightfully so, that tariffs basically haven't hurt the economy. They did tank the market for a little bit, but the market is basically recovered to pre-tariff levels. So he's taking quote unquote credit for that. He loves the stock market going up. He would, if he felt like he could do it, he'd fire Jerome Powell tomorrow and insert somebody who'd bring interest rates down to zero. So I don't think peak money. I think from a value standpoint, we're going to continue to see inflation be high. I don't think there's much we can do about inflation, especially when we want interest rates low, and it really doesn't seem that the debt is going to be taken care of anytime soon, especially if this new bill that got presented today passes. I think from peak mineral and peak metals, I'm going to just go on and I'm going to just say I don't know. I'm not an expert in mineral demand. I do know that if we are at all going to meet these energy transition scenarios that the IEA, the EIA throws out, we're nowhere near peak mineral demand. But if we're going to wean ourselves off of the renewables and the pivot is now back to natural gas, we might be. So I would probably say no, we're not peak minerals. Peak metals, that's just a refinement of the minerals. So they're kind of one and the same. We're going to need minerals if we're going to do this transition. The next one, though, Stu, the other big topic that we've seen here, if you want to just jump to the next slide, is tariffs. And the real question is, are tariffs signal or are they noise? And I think they're a little bit of noise. Well, noise and signal, and here's what I mean. If we go back in history a little bit, back to 2014, 2012 through 2016, that was the onset of U.S. shale. That was when everybody got into the Permian. If you got into the Permian at that time, you made a lot of money. If you got in a little bit late, you were unfortunate. But everybody, the markets were rewarding companies for showing production growth. They weren't necessarily rewarding you for showing a profit. It's a little bit like that scene from Silicon Valley where he's like, no, you want to show no revenue, because if you show revenue, then they'll ask you how much and it'll never be enough. What you want to do is be pre-revenue so that you can just be infinitely valued. And if it's a hilarious scene, I highly recommend go checking out. But what the point is they were being rewarded for production growth. Nobody really cared if they were actually making a profit. Well, then 2016, 2017, 2018 came along. Debts became unsustainable. And oops, now all of a sudden we care about profit. None of these shale companies were making profits, and we saw a wave of bankruptcy. So the incentive model then flipped to, you kind of got to show a profit. And so, which I mean is like business. But one thing that was learned in that time period, specifically during COVID, was as prices come down, as oil prices come down, service prices come down. So if you're actually, and the sentiment became at lower oil prices, it actually makes sense to put pipe in the ground. And when I mean put pipe in the ground, just drill wells, but don't complete them, duck them, put pipe in the ground.
Right.
The
Drilled
issue
but
is,
uncompleted.
the issue is these tariffs have risen the cost of steel, has risen, inflation have driven up day rates to the point where that sentiment today isn't true. Travis Stice talked about it as well. As it's actually, we would like to duck wells, but we are experiencing the fact that our raw materials costs have gone up to the point where it doesn't make sense to do that. Now, Diamondback's still drilling, don't get me wrong, but they are in the process of, really working through this cost curve that we've entered. And so I think from the signal standpoint, I think what tariffs are signaling is that there's way less tier one inventory than we think. And I think the noise is that tariffs directly are going to affect the oil business. No, I think what they're showing us is that we've got higher break evens than we think. And that all of a sudden now we're going to end up being in a situation where we drill through our tier one inventory at lower prices. And now all of a sudden, well, guess what? When prices rise, we end up in this situation where we could have made a lot more money had we had maybe saved all that tier one inventory. We got a question here, Stu. JERA threatened Australia for not building hydrogen and ammonia infrastructure. Will they threaten us if we get rid of 45V credits? I got to punt on that one, Stu. I got no idea.
I'm not sure either, but I'm looking up JERA. JERA is Japan's largest power generation corporation. In a 50-50 joint split between Tokyo Power, if it's the same one.
Yeah.
And so I'm not sure. JERA claims that for net zero CO2 emissions by 2050, focusing on sustainable energy. I'm not sure about that because Japan is still importing they're the third largest importer of LNG, and they're importing coal from Australia. And so this very may well be them. But then the UK, when the UK cut down all of their coal mines, they just bought a load of coking coal from Australia through Japan for their steel mill that was about to shut down. So the UK shipped an additional, they caused another 7,000 tons of CO2 going into the air of carbon output because they had to buy coking coal through Japan. So I'm not sure if that was that part of that.
Yeah, interesting. Well, let's go to the last one here for oil before we get into our predictions for Q3, and that's oil and gas going global. This is the kind of the third big theme we've seen over the quarter. Is everybody is the global energy trade has happened, and when I mean trade, I mean investment. You've got the Middle East investing heavily in here. You've got oil and gas companies like EOG going abroad. You've got American power companies going abroad in this. And, while tariffs theoretically are meant to kind of create our internal supply, what has happened is energy has now gone global. And, I think it's a good thing. I'm not, do I love the fact that Saudi Arabia, Qatar, and UAE are going to basically own our energy infrastructure? I mean, I'm not thrilled by it. I'd rather Exxon, Chevron, and our large American companies do this. But on some level, we need the money, we need the investment, and these countries see an opportunity to invest and have much lower thresholds for investment criteria than some of the American companies because of the way they have it set up. So I think it's interesting. I mean, we ran this last week, this tour that President Trump went on of the Gulf states. It was profitable. Again, I'd come back to, am I pumped that,
Well, I'm not sure. I think I'm still here. And let me take a look at this one right here. Michael looks like his device is not connected. So looks like Michael may have been lost out of here. Let me take a look at this one. This is gasprocessingnews.com from Mr. LinkedIn user, and switching investment from Australia unless it gets government support. Thank you very much. I do appreciate that. So when we take a look also at EOG, the EOG is referring to a article, and it looks like Michael's back now. Yay!
For some reason, my camera turned off, so crazy.
And I was going on to, and it's not me because I'm using my backup Starlink, and it's amazing that it's working. So EOG goes abroad, so does America Power. This was a wonderful article on DRW's Substack. And DRW had a great point in here. And when he said it is not about drill baby drill, it's drill baby drill energy dominance, and it's 2.0. It's not domestic. It couldn't be. So now it hits the road. And what he's talking about, DRW, David Ramsden Wood, who I talked to this week, is he's saying that the investment like EOG going over and doing oil field service, this is now energy as an export, is not only just exporting our product, LNG, it's exporting our expertise, which is our great American oil and gas. And I have a prediction that I may want to say here, that I have a feeling the UK is going to run Shell and BP out, and we may end up with two great companies.
Yeah, we might. But I think now the real question is, what does all this mean?
Well, let me also point out real quickly, Newsom's war, this one's going to heat up just while we're on this slide. Governor Newsom has totally destroyed the oil and gas industry in California. California is the fifth largest economy in the world. They're about $4 or $5 a gallon in gasoline and diesel right now, but they are closing their refineries because of the Newsom war on oil and gas. And that is going to turn oil to $9 a gallon. And then if any one of them breaks, you're going to see $12 a gallon right there. So he's a security risk.
Absolutely. So, Stu, what does all this mean for us?
I think it's a great time to be in the energy market, whether you're a utility or an oil and gas company. It's a great time to invest in the United States. Flat out, we're seeing the trillions of dollars going. Do I want to invest it in Russia, or do I want to invest it in the United States? I'll take the United States because we are now rolling.
Absolutely. And I think if you're a company, some things to think about is understanding and really future proofing your supply chain, because as we saw with these tariffs coming on quick and them going away just as quick, shows that this stuff can happen. If you don't understand where your supplies come from, if you don't quite understand exactly where things are going, you better know that, because it can happen. And then the third thing I think that's very interesting is the non-shale projects. We talked about peak shale. Well,
Yep.
How to get around peak shale. If you're an oil and gas or an energy investor and you want to get into the energy business, I would highly consider investing in projects that maybe aren't shale. Specifically, some of the conventional prospects that I know we'd look at every day. There's a niche market going on right now for this stuff. But I think the last thing, Stu, and so the goal is to do these every quarter. And so we'll be back next quarter to follow up on this. But before we leave, we got some predictions to make, Stu. So go ahead. I want to hear what you think, and then we'll get to what I think, and then we'll wrap this up.
Okay. I'm going to put myself out on the line here. Nat gas at 70 and gas at 30, $3.50. And I think that we are now seeing, with the amount of demand for LNG, that it's going to flatten out, and instead of being nat gas being cyclical, I'm not sure. I'm not sure about this question. How is the uptick in exporting security? Our supply chain seems
Things like an anti
sorry.
schizophrenic measure. Whatever. Just get back to your stuff. We'll answer the
Okay.
question later.
Uh, oh, hey, look at that! Excellent discussion. I love it. Thank you. I
Thank
appreciate
you,
it. I'll
Lee.
pay you later. So at nat gas at 70, I think that is a realistic number still. California heats up to a national security risk. This is going to be a major headline coming up here. The new trading blocks are going to be defined, and they're going to be more defined by the end of the year. But you're going to see evidence of this and more people talking about it. And the Russia-Ukraine war will either be ended or the U.S. walks within 2 months. And I'm going to go out on a limb on that one. President Trump still does not have the right team in place to get that thing drug across. And I think he has the right idea to walk away and let Russia and Ukraine figure it out. There, at a certain point, you got to just draw the line and walk out. And then all bets are off if the Japanese bond market crashes. Holy smokes, Batman, they're on thin ice right now.
Well, they really are. So here's my predictions. Oil's going to be closer to 50 than 70. So I'm going to take the opposite approach. I actually think we're going to continue to see lower pricing from this standpoint. I think the big thing is, from an oil and gas standpoint, geological uncertainty is going to outweigh any price uncertainty from a low side. I think, this was hinted at by Travis Stice in his message. I've actually got a podcast coming up in 2 weeks with friend of the show, Bennett Williams, who's an excellent economist, has worked for Exxon and Chevron, or Chevron, I think, in their, market dynamics, working offshore, loads of project economics understanding. And he wrote a great piece specifically on this as well that he shared with me. So I think we're going to, the conversation, I believe in Q3 when we have this, is that, geology's getting bad. It's not that pricing sucks, is that the geology kind of sucks. Along with that, I think you're going to see people pivot to conventional drilling. We're seeing that in our portfolio right now. Conventional drilling is actually succeeding relative to shale when it comes to our investments, which is, I think, a kind of an anti-opinion. Everyone says go buy Permian. And then finally, I believe that the U.S. and Iran will strike a nuclear deal. And I do believe that that's going to include some Iranian oil exports, which I do believe is going to add and help that oil get down to 50. So I think we're a little bit differ on what we see happening, and it'll make for an interesting discussion
I think so.
next quarter. But this was fun, Stu. Our little State of the Union. We're going to make sure to do these. If you guys need to get a hold of us or ask any questions to us, reach out to Stu or myself on LinkedIn, or you can go to the next slide, Stu. Email us at our emails down below. Take a screenshot. We will send these two slides if anybody wants it. One final question. Will we see more large-scale steel production onshore? I mean, I'll take this one to begin with, but I think it's interesting. The answer is yes. I think what's interesting is that we might get more steel production here in the United States, but is it going to lead to more jobs? No. I mean, these steel plants are basically fully automated. So sure, we can bring more steel production back here, and I'm in favor of that. But I don't think bringing steel production back to the United States is a way to get more jobs. I think it's a way to get steel production back. I mean, Stu, what do you think?
I disagree. And let's take a look at the Philly shipyard this past week. Just announced that they, as a Korean-owned endeavor, they're investing billions of dollars to their shipyard. Now, a shipyard is important to the steel industry. Why? Because they buy a lot of steel. How many new people are going to be employed at that shipyard? So you take a look at all of these other things. If we look at the number of ships that are going to be built and the industrialization onshoring, I think the steel mills, while those may be automated, they're the products that are going to be done. The EU and the UK have destroyed their coal steel the largest steel plant in Germany has folded. So what has happened is they are relegated to only using arc furnaces, which is green energy, which means they can't use new steel. We're Americans and we have the Gulf of America, and so we got to have us some new steel. So the answer to that is yes.
No, absolutely. So, all right, guys. Well, with that, we'll let you get out of here. It's a short week. I'm sure most people are probably taking Friday off. If you're not, thank you very much. Most of our oil field folks are going to be out in the field, so we appreciate them. But that's a wrap for our 2025 Q2 State of the Union. We'll be back next quarter, guys. As always, follow us, energynewsbeat.com. Hit us up on LinkedIn if you need anything. We appreciate it.
Sounds great. See you. Thanks, Michael.